Coming up on the show today, Paris club creditors agreed to cancel $1.4 billion of Somali debt. Fitch and Moody's downgrade South Africa banks to junk. And Ghana slashes GDP forecast to 1.5% over coronavirus shock. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. We'll begin the show with intraday market numbers, and major markets here in Africa began the new quarter on a bearish note, with Nigeria's index taking the heaviest hit by 2.40%. South Africa's JSE index is next on the trail of losses, down by 1.94% at intraday. In Egypt, the index shaved off 1.85%, while Kenya closed positive on Tuesday. And in the Middle East, market sentiments were mostly negative at intraday. Saudi's index was the sole gainer by 2.07%, while the Qatari index shed 0.91%. In the UAE, Dubai's index lost 1.02%, while the Abu Dhabi index shed 0.25%. And stocks in Asia were lower today as a private survey showed Chinese manufacturing activity expanded slightly in March. In Japan, the Nikkei 225 led losses among the region's major markets as it dropped 4.5% to close at 18,065.41, while the Topix index shed 3.7% to end its trading day at 1,351.80. Mainland Chinese stock shed earlier gains to close lower, with the Shanghai Composite down 0.57%, while the Shenzhen Composite slipped 0.35%. The Hang Seng Index in Hong Kong climbed more than 2% as of its final hour of trading. Elsewhere, South Korea's Kospi fell 3.94%, while shares in Australia rose, with the ASX 200 ending its trading day 3.58% higher. Overall, the MSCI Asia ex-Japan index was 1.16% lower. We move over now to the European markets, where trading was lower in early trade today as global market sentiment continues to take a pummeling amid the coronavirus outbreak. All right, let's bring in Conrad Boser now from the Frankfurt Stock Exchange to tell us more. Hello, Conrad. Good afternoon. Good to see you again.
Good afternoon, Chimmy, from Frankfurt, where the German stock index DAX is down 4% at the moment.
Yeah, the second quarter of 2020 has started on a sore note on that European bourses, which has a lot to do with anticipation of negative news from the U.S. labor market. What numbers can you report to us?
Well, the numbers that I can give you are coming from the ADP, the American data research firm, which regularly updates its ADP jobs report. This is a report describing how many new jobs were created in the United States in the recent months, or how many jobs have vanished. Those numbers just came out, and I can report to you a relatively positive number. 27,000 jobs in the private sector in the United States have gone during the month of March. That is, of course, a decline in employment, but it's a much better number than what economists on the market on average had expected. The average expectation was a decline of jobs in the US in March of 150,000 jobs. Now that gives maybe a little bit of a hint of hope for tomorrow, when the Labor Department at Washington will update its weekly unemployment applications. You know, the number of jobless claims that Americans have filed during the recent weeks. Remember last week, the number that was reported was 3.3 million new unemployment claims, a much higher number than the market had anticipated. Everyone on the market now, of course, is looking forward to tomorrow and is discussing what to expect for this number tomorrow.
Now, Xerox has abandoned a $35 billion hostile bid for the PC and printer maker HP Incorporated. Is the coronavirus crisis playing a role here, and are we going to see more mergers and acquisitions called off?
Yes, Jimmy, and yes. Xerox is saying it's prioritizing the health and safety and well-being of its employees, customers and stakeholders, and its broader response to the pandemic over and above all other considerations, unquote. So the coronavirus is playing a role here officially. What Xerox is not saying is that the share price of the company has more than halved over the 5 last weeks, while at the same time shares in HP Inc., the PC and printer maker, only have lost about a quarter of their value. So the position of Xerox in this hostile takeover battle has really become unsustainable, not a good idea. Many people on the markets are convinced that a lot of mergers and acquisitions deals which had been in the pipeline before the coronavirus pandemic are now at least put on hold, and not only because of the huge changes in valuations, but also because a huge shift towards risk averseness among investors. You know, if you calculate with leverage, if you calculate with high and risky loans when you think about a takeover or a merger, then you are much more inclined to be careful now, or much less inclined to go for risky financing. This is something not only happening right now during the corona crisis, but also it's expected to persist and go on after the crisis is over, because of course the time that the economy will need, also the financial sector will need to readapt and come back to normal, will be quite a long time. So no very risky mergers and acquisitions to be expected, or at least much fewer of those deals.
And one of the big winners of this crisis are the makers of video conferencing software. Shares in Zoom Video Communications have gained more than 100% since the beginning of the year. What about Germany? Is Zoom booming there?
Yes, absolutely. Zoom is booming here in Germany, and not only Zoom. I can tell you about all sorts of different services that I had never heard about before the coronavirus. Now every hour I can tell you in some group I'm working in, or even families, private contacts are now managed by Skype. The kids are using Instagram and other social media platforms to communicate via video. I can tell you they are very much in demand, and that of course explains why, for example, the shares of Zoom have increased so significantly over the recent weeks. An enormous innovation boost is happening all over Germany right now. People who were really strongly opposed against new technologies for a very long time are now willing to accept those technologies. Actually, they are forced to accept them. If you don't use those technologies, then you are simply sitting in your home doing nothing. And that, of course, is something that people don't want and many people can't afford. The move towards home offices has caused a lot of, sharing of data and new flows of data. I guess that the way we are talking to each other via television is becoming the new normal for everyone.
And that's technology. All right, thank you very much for your time, Conrad. Enjoy the rest of the day. And in the UK, London's FTSE 100 saw their biggest quarterly drop since 1987, plunging 25%. That's in early trade. Let's bring in Juliana now to give us updates from the markets. Good afternoon, Juliana. Well, let's start from the data space. And the data released this morning shows UK manufacturing PMI was down at a 3-month low of 47.8. How are the markets reacting to that?
Good afternoon, Chimeze. Well, the markets didn't like it, and down, down, down is the direction that the FTSE is going. It's continuing its descent from early trading. As you said, manufacturing PMI, which really just looks at how the manufacturing sector has been doing over the past 4 weeks in the United Kingdom. It was down. It was its sharpest fall that we've seen in 12 years. In February, it was up 51.7. The flash reading, so the prediction was 48, but actually actually came in at 47.8, bearing in mind that 50 is kind of the benchmark for these PMI figures. Anything below 50 shows a contraction. Anything above is an expansion. Economists have been looking at the data, and of course, everybody is pointing to the coronavirus. Optimism is down, spending is lower. We're not getting the exports that we wanted. So the FTSE didn't like it, and neither did sterling, which fell by about 0.4% when that came out at mid-morning. At intraday, the all-share is down 3.58%. The FTSE 100 also down by 3.70%, and the FTSE 250 down by 3.45%. In currencies, the pound also down on the dollar, and it's unchanged on the euro and down on the Japanese yen.
And in corporate news, Sainsbury's has been accused of exploiting a loophole to keep Ergo's outlets open during the UK lockdown. What is the grounds of the accusers? Are supermarkets not exempted?
Well, supermarkets are exempt, and under the UK government guidelines, if you are selling essential products, then you can remain open. Over the first couple of days when this was announced, there were several stores that weren't sure whether or not they were deemed essential. But of course, supermarkets are. But Sainsbury's does own Argos, and there are several Argos stores that are within mega Sainsbury's department stores, and they've been kept open, and now they have been accused of jumping into this loophole. Argos, a very popular brand here in the UK, but the government do not deem that they sell enough essential items. Most of the stuff they sell really are games and toys and DIY items. But because it has been open, a lot of their staff members are complaining that they're getting a rush of customers who are, of course, looking online to find out where one is open. And, of course, they're then not adhering to these 2-metre social distancing rules. We're not sure yet whether or not the government will clamp down on Sainsbury's and ask them to close the stores. But at the moment, loophole or not, they are within their legal right to keep them open because it is open within their stores. That is deemed essential.
And in the midst of all of this and ongoing coronavirus crisis, how will you describe the first quarter of 2020, and what is the outlook for the second quarter?
Well, the first quarter of the year, I suppose everywhere around the world will be defined by COVID-19. Yesterday, Britain saw 389 deaths, doubling what it had the day before. And that's really going to be a huge strain on the government and its handling of it. At the moment, there are a lot of questions about whether or not Britain are doing enough or equal to what is happening in places like Germany and, of course, South Korea when it comes to their testing. We came off 2019 on some sort of high. It had been a really difficult year for Britain, no less because of Brexit. Theresa May obviously got, she was sent away from her post, and Boris Johnson got an historic election victory. For the first time in almost 3.5 years, business confidence was back, the property market was booming, and there seemed to be a little bit of optimism in the UK. We did leave the European Union on the 31st of January, and the PMI figures that show the health of the economy did show that Britain was finally getting back to some of its glory days that it had craved for so long. But then, alas, of course, COVID-19 did its world tour around the planet, and the worst place that it's hit is Europe, and particularly being Britain. We did hear earlier in the week that MEPs, European MEPs, are asking Britain to perhaps extend that transition period that's enshrined in law. So according to Boris Johnson, we are still leaving the EU on the 31st. Well, we'll be coming out of the transition period on the 31st of December 2020. But a lot of people will ask questions about that, Chimaze, whether or not it's a good time, considering already that potentially 15% of Britain's GDP has been lost to this coronavirus outbreak, that if indeed, you know, Brexit is something that should be questionable. But yeah, so far, to sum it up in one word, coronavirus is that word.
I will see how it goes. Thank you, and enjoy the rest of the day. And we'll take a quick break. We'll be back in a moment. Just stay with us. The Paris Club of Creditor Nations has agreed to restructure Somalia's debt, including immediately cancelling $1.4 billion owned by the nation. The decision cancels 67% of the debts owed to Paris Club creditors by Somalia. Somali Finance Minister says the government will hold separate bilateral discussions with the creditors to finalize the process and continue the economic reform it had undertaken over the past 8 years to enable the debt relief. 3 decades of conflict have left Somalia all but cut off from the global financial system, and relief from its debt is expected to open the way for new sources of financing for the country. And 2 top rating agencies, Fitch and Moody's, have downgraded big South African banks' credit ratings to junk. Fitch Ratings and Moody's downgraded South African lenders' ratings to BB and Baa3, respectively, with a negative outlook, meaning the lenders are no longer considered investment grade and they risk further downgrades if the situation worsens. According to the agencies, Standard Bank, Absa, First Rand and Nedbank's fortunes are tied to the deteriorating economy in South Africa, already in trouble prior to the outbreak of coronavirus. Both agencies highlighted the further blow to the economy due to the pandemic and a 21-day nationwide lockdown as the key factor, with banks expected to see rising bad debts and lower revenues. And Moody's Investor Services has placed Angola government's B3 long-term issuer ratings and senior unsecured rating under review for downgrade. According to Moody's, the decision to place Angola's ratings on review for downgrade is due to the magnitude of the shock from the sharp drop in oil prices and an acute tightening in global financing conditions on Angola's already weak public finances. The ratings agency says weak governance, notwithstanding a number of reforms implemented in recent years, undermines the government's capacity to respond to this shock and is a driver of this rating action. The rapid spread of the coronavirus, deteriorating global economic outlook, falling oil prices and asset price declines are creating a severe and extensive credit shock across many sectors, regions and markets. And Ghana's Finance Ministry has slashed its 2020 GDP growth forecast from 6.8% to 1.5% due to the coronavirus pandemic, a rate that will represent the Ghanaian economy's worst performance in nearly 4 decades. According to the Finance Minister, the new growth forecast of 1.5% could be lowered further if the country goes into full lockdown to curb the spread of the virus, which has so far infected 152 in Ghana and killed 5. Authorities have imposed a 2-week lockdown in the capital Accra and the city of Kumasi, which are the worst affected areas, as well as being Ghana's main economic hubs. A 50% slump in the global oil price, partly due to coronavirus, means the government forecasts a near $1 billion shortfall in oil revenue this year, as well as lower tax revenues and import duties. And Kenya Airways and some private airlines in Egypt are seeking financial assistance from their governments to cushion losses due to the coronavirus outbreak. Kenya Airways chairman says the airline has sought an undisclosed amount of cash from the government to help it cover critical costs, such as payment of staff salaries. The carrier, in which Air France KLM holds a small stake, is only operating a handful of local flights after the government stopped all international flights last week to curb the spread of the coronavirus. Meanwhile, Egypt's private airlines companies appealed to the civil aviation minister to intervene to stop the losses of the companies amid the coronavirus crisis. A Tunisian fashion designer has turned her atelier into a workshop to produce face masks, where around 2,000 medical masks are dispatched daily to hospitals in need. So far, she has distributed 8,000 masks as she produces between 1,000 to 1,500 masks every day. Let's watch this.
Driven by a shortage of face masks in Tunisia, a designer decided to take a break from the fashion world to produce hundreds of face masks dispatched daily to hospitals and pharmacies. Khaloud Golsmi has turned her small atelier into a workshop to produce reusable face masks using a durable and breathable non-woven fabric. She only started 1 week ago and at first self-financed the project before other associations pitched in to fund the small workshop of 30 tailors.
Because of the spread of the coronavirus, face masks are not available at pharmacies. I thought that I can use my atelier to produce these masks and at the same time utilizing my biology degree in order to make these masks available in pharmacies and hospitals.
So far, she's distributed 8,000 masks as she produces between 1,000 to 1,500 every day. She aims to produce more than 10,000 masks in upcoming weeks.
This is an example of the face mask we produce. We use the TNT fabric. As you can see, there are 2 layers so that it is more effective. The material itself is breathable as it has small openings and an internal layer functioning as a protective shield.
Girlsme says she utilized her degree in biology to produce face masks that are up to health standards that can be later distributed to hospitals and pharmacies.
This is the first stage. We get this fabric of the same material with 2 colors, one with white and one blue. This is the non-woven TNT. You can see the material as there are small holes so that when you sneeze or cough into it, it would pass the first layer but remains in the second layer. Then we move to sew the fabrics in the machine and then we bring it here to fold them, as you can see. Here we sew the edges of the mask. Later we put the finishing touches and add these straps so that we can finally get the piece and then pack them.
Tunisia, which suffers from limited health infrastructure, is fighting to contain the outbreak after it said it had 278 cases and 8 deaths.
In Abidjan, traders have nowhere to sell after Abidjan closes market as authorities fight against the spread of coronavirus. Abidjan authorities closed the city's largest market for cleanup to help stop the spread of the coronavirus, while vendors set up outside the premises are being moved away.
With 101 cases as of Sunday, March 29th, Ivory Coast is working to stop the coronavirus from spreading. Abidjan's Ajame market closes doors for a few days, with workers scraping dry dirt off the floors, clearing all remaining rubbish, and rats looking for food. Outside the market's walls, vendors set up temporary stores to sell their remaining produce, but local police were ordered to kick them out.
We are trying to figure things out because we have produce in stock. So that's why, because they closed now, we have to sell outside the market in order to manage. Before, we don't have any more produce. Otherwise, we understand the president's message. We are ready to stay at home. We are happy.
Everything has become expensive in the market. We want to stay at home, but how do we stay at home? We are poor. We come and sell at the markets to feed our families. Our kids are at home. Our wives are at home. What do we do? We know about the disease. We want to stay home. It's true, but we ask the government for help during this period.
The market's manager said the shutdown was necessary to potentially save lives because of the number of people who come to work and buy produce every day who can spread the disease easily.
Qu'on ne voit pas, il est invisible. Et vous savez, au marché, c'est la foule. Et si 2, 3, 4 personnes déjà sont infectées, c'est tout le monde qui est parti. Vous voyez ce que ça peut faire, des dégâts énormes. Mais nous ne voudrions pas qu'il en soit ainsi.
Hygiene workers were disinfecting the empty and cleaned markets.
And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi. You're welcome.